Cover Payments, Market Practice Guideline, February 2024. 1. Introduction. The Cover Payment document was the first market practice guideline published by the PMPG in 2008. Following several updates, version 3.0 was published in 2017. Significant developments have been in motion since 2017. These could be summarized as a general trend towards real-time. Introduction of sectoral sanctions, improved transparency by adopting Swift GPI, implementation of ISO 20022 messages. The introduction of ISO 20022 creates the need to review existing market practice guidelines and adjust to make them fit for purpose in the ISO 20022 world. In this document, we will use the term Financial Institution Credit Transfer (COV) or FICT-COV for short to mean MT202 COV and or MT205 COV and or PAX.009 COV. When a recommendation or reference is made that pertains only to a specific implementation of the FICT-COV, the document will reference the specific message type, such as MT202 COV, MT205 COV or PAX.009 COV. In addition to the change in message format, the Swift community is moving away from a message processing model to the end-to-end transaction orchestration with the transaction copy concept that will be implemented in a new infrastructure referred to as the Swift Transaction Manager Platform (TM). The Swift TM will provide the industry with more visibility into the underlying transaction flow and may reduce the use of direct and cover in favor of serial payments. This document intends to provide further awareness over issues for those communities that continue to use the cover method within established risk boundaries. The important industry issues highlighted in this document include heightened awareness over the impact of the 2019 Singapore court case, see page 8, on direct and cover payments. Need to support two different legal interpretations of direct and cover messages. One implied contract model and second, the direct as an advice. An existing practice in some communities of a MT202 is a direct message that is covered via MT202 core. 1.1 Background. In response to recommendations made by the Wolfsburg Group 1 and the Clearing House in 2007 to improve the transparency of direct and cover payments, and with the consensus of the Swift community, Swift defined a dedicated message to support cover payments, the MT202 COV, that was implemented for general use in the 2009 standards release. Access the Swift MT202 COV documentation via My Standards here. The use of this variant will be determined by the sending bank based on the initial transaction type. 1 Home, Wolfsburg Group, wolfsburg-group.org PMPG. Cover Payments, Market Practice Guideline, February 2024. 5. In the 2009 standards release, the MT202 COV scope is defined as follows. This message is sent by or on behalf of the ordering institution directly, or through correspondence, to the financial institution account servicer of the beneficiary institution. It must only be used to order the movement of funds related to an underlying customer credit transfer that was sent with the cover method. The MT202 COV must not be used for any other interbank transfer. For these transfers, the MT202 must be used. Note: beneficiary institution does not receive the MT202 COV directly but is advised via MT910 of the credit. This scope statement should be read carefully by everyone using MT202 COV as it drives considerations such as no limitation to specific currencies or regions. The MT202 COV is universal. It is specific to cover a single customer credit transfer. MT103. The MT202 COV is not an alternative message type but the exclusive method to cover third-party payments. It is not to be used to cover any other message type. The MT202 is also a valid message for interbank transfers but must not be used to cover the funds related to an underlying customer credit transfer. The PMPG acknowledges that most commercial payments are settled using the serial payment method, as defined in the Swift User Handbook, as an alternative to the cover payment method. The scope of this document is not to address the serial method too. Improvements in speed of settlement through Swift GPI may lead to a further growth in the serial method over cover payments. In the meantime, this document is provided for the benefit of communities that continue to use the cover method within their recognized risk boundaries. In July 2016, the Bank for International Settlement BIS Committee on Payments and Market Infrastructures (CPMI) discussed the topic of MT202 COV in its technical report on correspondent banking and acknowledged that, according to information received during the consultation process of this report, Clearing systems limitations as well as time zone considerations necessitate that both the serial MT103 and the cover MT202 COV methods remain relevant. The CPMI invited the Wolfsburg Group, as well as the PMPG, to review their principles governing the use cases for payment messages, such as the PMPG's market practice guidelines and white papers. Responding to this request, the PMPG had published version 3.0 of the MT202 COV market practice guidelines. A new version 4.0 of these guidelines becomes necessary as the industry is in the process to migrate all payment messages to the new ISO 20022 standard. It should also be noted that in some markets, banks may send a MT202 message as cover of a direct cross-border MT202 financial institution transfer. The driver for this is often, similar to cover payments for customer transfers, to provide adequate notification to the beneficiary bank. The reader should also consult the PMPG FATF Recommendation 16 Market Practice Guideline on the PMPG website. www.pmpg.info. PMPG, Cover Payments, Market Practice Guideline, February 2024 6. That funds are being sent through the respective intermediary agents, enabling that bank to position the expected incoming funds with their treasury so that the funds can be applied with good value to the beneficiary institution. This settlement method is rather an exception than an established market practice, however, it must be mentioned in the document for the sake of completeness. 1.2 What happens to cover messages when ISO 20022 is introduced? In ISO 20022, the cover message is not a dedicated message like the MT202 COV but is identified via a specific sub-element in the PAX.009. When a PAX.009 is used as a cover message, the underlying customer credit transfer complex element is present. 3. The underlying customer credit transfer complex element contains some elements of the underlying PAX.008 that is being covered by the PAX.009. In this document, we refer to a PAX.009 that has the underlying customer credit transfer complex element present as a CBPR plus PAX.009.001.08 _ financial institution credit transfer PAX.009 COV. CBPR Plus has defined a dedicated usage guideline for the PAX.009 when used as a cover. A new dedicated usage guideline of the PAX.009 has been defined and is formally referred to as CBPR Plus PAX.009.001.08 ADV financial institution credit transfer PAX 009 ADV. This variant with the settlement method set to COV must be used as a direct message advising the cover to be received by a PAX.009, and not with a PAX.009 COV4. This solution was introduced late in the development of the CBPR Plus guideline and may need to be revisited in the future if the community determines that a dedicated direct advice message will be more appropriate. 2 Market Practice Guidelines for FICT COV. MPG FICT COV Number 1. Business Principles. The FICT COV is a specific use case of the FICT. Therefore, the FICT COV is also an interbank financial institution transfer. Sequence B of the MT202 COV is a copy of a selection of fields of the underlying MT103 customer credit transfer. Its fields should remain unchanged as the message passes through the banking chain. Use of Sequence B by the intermediary institutions is meant to provide transparency and enable regulatory screening, including potential FATF Recommendation 165 checks if required by local regulations. The MT202 COV MT205 COV is not an alternative message type for MT103s. The underlying customer credit transfer element of the PAX.009 COV is a copy of a selection of elements of the underlying PAX.008 customer credit transfer. Its elements must remain unchanged as the message passes through the banking chain. 3. The complete path to the element is document FICDTTRF CDTTRF TXINF underlead CSTMR CDTTRF. 4. Reason for that is that the PAX.009 COV only supports the underlying customer credit transfer complex element and not an underlying financial institution credit transfer complex element. 5 https://cfat-gaffic.org/index.php/documents/fat-40r/382-fat-recommendation-16-wire-transfer Cover payments, market practice guideline, February 2024-7. Please note that the debtor agent, and creditor are all mandatory elements. Use of the underlying customer credit transfer element by the intermediary institution enables fulfillment of compliance obligations, including but not limited to FATF Recommendation 16 validations, if required by local regulations. The PAX.009 COV is not an alternative message type for PAX.008. Figure 1. Direct MT103 PAX.008 and cover MT202 COV PAX.009 COV message flow source PMPG. Note: the beneficiary institution does not receive the MT202 COV but only a credit advice MT910 CAMP.054. In some cases, HVPS Plus might use an equivalent message if Swift messages are not natively supported. Existing commercial relationships between the sender and receiver should not change due to the usage of the MT202 COV PAX.009 COV. Note: for awareness, it is worth noting that the relationship between the direct and cover is evolving. The migration to ISO 20022 and the introduction of the Swift Transaction Manager platform (TM) requires a deeper analysis of its impact on direct and cover messages. A recent court case in Singapore highlighted that the current industry view is that the MT103 and MT202 COV exist independently from each other. The receipt of the MT103 might be seen as an implied contract between the sender and receiver in some local jurisdictions. Hence, the receipt by the receiver, instructed agent and good faith execution of the payment order creates the obligation for the bank sending the direct message to settle the transaction. The use of the UETR in ISO 20022, in addition to the transaction identification data element, challenges the view of direct and cover independence. In ISO 20022, the use of a unique UETR PMPG, Cover Payments, Market Practice Guideline, February 2024 8, binds the cover message to the direct message so that a single transaction can be facilitated via multiple underlying messages. The direct and cover combine to make a whole transaction and hence create a transactional linkage that is absent in the MT Model 6. In the Swift TM data model, direct, cover and return are all linked into the same transaction copy. Whilst it is recognized practice by the receiver instructed agent to execute payment instructions on the basis of a risk-based approach, the evolution of the relation between direct and cover requires heightened attention by the sender instructing agent. To highlight the risks arising in the current model, the PMPG has collated the following overview. A new market practice guideline MPG FICT COV number 14, cover chain risk has been introduced to this extent. The detailed flows outlined below for each use case are in the appendix. Table 1. Risk scenarios in the current direct and cover model source, PMPG. The current industry debate is indicating that there is a need for the option to indicate if settlement of the direct message is promised or if the beneficiary bank should treat the direct message as an advice only, subject to credit upon receipt of the cover. The length of the cover chain and jurisdictions involved will play a role in the decision of the bank creating the direct and cover. The instructing agent should have the option to indicate to the next agent beneficiary creditor that the credit to the beneficiary is conditional upon receipt of the cover only. PMPG recognizes that this optionality will require the consideration and implementation of new processes by the global industry. The migration from MT to ISO 20022 provides a unique opportunity to address this market problem long term. Various options could be considered, amongst those, the introduction of a new service level code. 6. The CAMP.054 debit credit notification should reference the same UETR as the PAX.008 and PAX.009. PMPG, Cover Payments, Market Practice Guideline, February 2024 9, a dedicated usage guidance. MPG FICT COV number 2, Timing of Screening. Efforts should be made to avoid payment delays associated with regulatory screening by the receiving institution and should take place upon receipt of the payment. Suspect hits might require further investigation by the financial institution's compliance department or government agencies to differentiate between real hits and false positives. Screening upon receipt allows maximum time for remediation and minimizes the possibility of delays. Timelines of transaction processing has become more visible for Swift GPI transactions. Note: additional screening might be required depending on local regulatory standards, updated lists, and/or a time lag between the moment the payment is received and the actual execution of the payment. Further delays might happen if the receiving institution needs to request additional information from the sending institution via a Request for Information (RFI). In ISO 20022 messages, additional data elements are available that, if used properly, can preempt an RFI. Examples include the place and date of birth in the private identification complex element or use of the purpose element. MPG FICT COV Number 3. Operational risk. A delay or reject in processing of the MT202 COV PAX.009 COV should be advised as quickly as possible, preferably with an update to the GPI tracker via API or MT2997 preferred option for GPI members 8, and MT296 PAX.002 to the previous financial institution, instructing agent, in the cover payment chain, unless prohibited by law. On receipt of this advice, the ordering institution on its turn should advise the beneficiary institution of the delay or the cancellation, preferably with an MT1959 if an update via the GPI tracker is not possible. Note: the introduction of the universal confirmations by Swift in November 2020 should enable the debtor agent ordering bank to identify a reject by any of the agents in the chain. MPG FICT COV Number 4. Multiple credit transfers. An ordering institution must not cover multiple underlying customer credit transfers, be it in Montana 10210, a PAX.008 with multiple credit transfers, or a file made up of several MT103's PAX.008s, with a single MT202 COV PAX.009 COV. PAX.009 COV is only used to cover a single PAX.008. Note: PAX.009 ADV with the settlement method code, allowing to be covered by a PAX.009, will not include the underlying customer credit transfer complex element and hence will be a regular PAX.009. 7. Swift has created a specific tracker message TRCK.001. 8. Swift GPI SLA requirements apply. 9. In some cases, the market practice might be to use a MT199 or MT299 10 multiple customer credit transfer PMPG. Cover payments, market practice guideline, February 2024 10. MPG FICT COV Number 5. Clearing systems and PAX.009 COV. Clearing houses and value transfer networks should be able to process the PAX.009 COV or any equivalent format. If a clearing system is not able to handle the underlying information in a cover message, the local user community will have to decide how to handle this additional information. A direct MT103 may be covered in a local clearing system via a PAX.009 COV, or a direct PAX.008 might be covered via MT202 COV, MT205 COV in the local clearing system. Or if a local clearing system can handle a PAX.009 COV, then the direct message can be a PAX.008 or MT103. MPG FICT COV Number 6. Meaningless or incomplete information. An ordering institution debtor agent must ensure that cross-border commercial payments are accompanied by accurate and meaningful information of the ordering customer, debtor and beneficiary customer, creditor to meet FATF 16 requirements. This should also apply to Field 50A ordering customer and Field 59A beneficiary customer in Sequence B of the MT202 COV, as well as to the debtor and creditor elements in the underlying customer credit transfer element of the PAX.009 COV. A guideline to the formatting these fields is provided in the PMPG's Market Practice Guidelines for use of Fields 50A ordering customer and 59A beneficiary customer to comply with FATF Recommendation 16 in the Structured Ordering and Beneficiary Customer Data in Payments on the PMPG website www.pmpg.info. The underlying ordering customer and beneficiary customer information in the MT202 COV Sequence B must be the same as in Field 50A and 59A of the underlying related MT103. Debtor, Debtor account, creditor and creditor account elements in the underlying customer credit transfer element of the PAX.009 COV must be the same as in the PAX.00811. MPG FI-CT COV number 7. Use of BICs to identify financial institutions. Whenever a financial institution BIC is available, the ordering institution debtor agent should use Option A of Swift MT fields to identify the financial institution and should strictly avoid the use of Option D. This should also apply to all financial institution fields in Sequence B of the MT202 COV, as the provision of structured information on all financial institutions part of the payment chain will enable easier and faster screening by intermediary financial institutions. The BICFI element in the ISO 20022 message for any agent involved in the payment and should strictly avoid including only the agent's name. Additional organizational identifiers such as INLAY can be added. This equally applies to all agent elements in the underlying customer credit transfer elements of the PAX. 009 COV is a copy of the agents referenced in the PAX.008, where the provision of structured information on all agents enables easier and faster screening by intermediary agents. 11. Please note that debtor element, debtor account element, creditor element and creditor account element are complex data. Elements and all sub-elements, e.g. debtor name, postal address etc., need to be included. PMPG. Cover payments, market practice guideline, February 2024 11. MPG FI-CT COV number 8, roles and responsibilities. The intermediary institution's responsibilities are to pass on the information unaltered in Sequence B or the underlying customer credit transfer element to the next institution agent. Meet its compliance obligations, i.e., screening the message against regulatory filters is required by local law applicable to the intermediary institution. If the intermediary determines that a wrong message type was used, they have the right, and in some jurisdictions the obligation, to reject or inquire in line with FATF 16 requirements. The originating institution debtor agent responsibilities are to determine the correct message type for the transfer, ensure use of the MT202 COV, MT205 COV, PAX.009 COV instead of the MT202, MT205, PAX.009 if the cover method is chosen. Using the incorrect message could be interpreted as an attempt to avoid transparency and will cause a problem for all subsequent banks' agents and is not in line with the industry standard. Furthermore, it could also constitute a breach of FATF 16 requirements. If a PAX.009 ADV is used, the agent creating the direct PAX.009 ADV and the covering PAX.009 core should ensure that all agents used in the PAX.009 ADV are visible to the cover chain. MPG FI-CT COV number 9, claims and compensation. The cover might be delayed due to screening and resulting RFIs by the intermediary, and the use of funds by the intermediary might be subject to a claim if the creditor agent has already credited the creditor before the cover has been received. The FI court COV process should utilize the existing processes established for MT103 or PAX.008. Note: in most cases today, a delay in MT103 PAX.008 processing, due to regulatory screening, does not result in a claim unless a real use of funds exists by the intermediary institution. MPG FI-CT COV number 10, honoring of cutoff times. The MT202 COV PAX.009 COV should follow existing cutoff times for customer credit transfers in RTGS systems and should not be used during time periods reserved for interbank settlement, unless it has been pre-agreed between the sending and receiving bank or local market practice. MPG FI-CT COV number 11, return of funds. In the case that the intermediary bank is the correspondent for both agents involved in the return, funds can be returned by simple debit authorization across the books of the common intermediary. In the case that an intermediary bank or the beneficiary bank creditor agent has to return the funds to the ordering bank without a common intermediary, it is strongly recommended. PMPG, Cover Payments, Market Practice Guideline, February 2024 12. To use the MT202 COV, MT205 COV by the first initiating bank of the return to preserve full transparency within the interbank chain. The first 6 characters of line 1 of field 72 in sequence A should include the sequence RETN. Use of the PAX.004 is the dedicated return message. The return chain element includes the parties in the return payment chain, noting the parties reverse, i.e., change role from the original payment whereby the debtor of the original payment becomes the creditor in the return chain. Figure 2. Return of the transaction by the creditor agent, source, PMPG. The PAX.004 return payment also uses a number of other original elements in the transaction information to capture information from the underlying payment that the return payment relates to. Original end-to-end identification, original interbank settlement date, original UETR, original interbank settlement amount should be included. The standard return reason codes should be used 12. Note, the return can take place via intermediaries or clearing systems. If the return of the cover is decided executed by one of the intermediary banks, it is strongly recommended that the ordering bank of the initial MT103 informs the beneficiary bank about the rejection using an MT196 message, as soon as the funds are received back. The beneficiary bank should consider the original MT103 inches null and void, and confirm the cancellation to the ordering bank. In the case of an MX message, the agent instructing the direct should inform the creditor agent via the CAMP.056, with the code, cover, when receiving the PAX.004 return unless the creditor. 12. The code list representing the return reason is part of the ISO 20022 external code list. Cover payments, market practice guideline, February 2024 13. Agent has instructed the return. In that case, the instructing agent of the PAX.008 should have received a PAX.002 with the code word RJCT. To ensure a fast return processing of the funds via MT202 COV when the original MT103 is rejected or considered null and void, it is recommended that the beneficiary bank recredits immediately the Loro Nostro account of the correspondent bank quoting the reason, as well any further details to identify the underlying transaction. MPG FICT COV number 12. Reference identification newly added in version 4.0. The end-to-end identification element in the PAX.009 COV should transport the instruction ID of the underlying PAX.008 being covered. The UETR element in the PAX.009 COV must transport the same UETR as the underlying PAX.008. Note, as there is only one UETR for the PAX.008 and the corresponding PAX.009 COV, it clearly articulates that both messages are part of the same transaction. Related to MPG number 1. In the PAX.009 the initiator of the payment is an agent, hence the end-to-end identification is available as a reference field of the agent generating the PAX.009 COV. MPG FICT COV number 13. Cancellation in the direct and cover payment chain newly added in version 4.0. The agent who created the direct and cover messages is responsible to send a payment cancellation message MT192 CAMP.056 to the instructed agent of the direct message or use the GPI stop and recall service GSRP 13. The instructed agent considers the direct message null and void and confirms cancellation via MT196 CAMP.029 or GSRP if subscribed to it is the responsibility of the agent responding to the cancellation to instruct the payment return, as necessary, once covering funds are received. MPG FICT COV number 14. Cover chain risk proposed new practice. The agent bank instructing the direct and cover, in non-advice mode e.g., by not using a new service level code element, wait for settlement, WFSM, has to be aware that the cover payment could be subject to seizure or blocking by intermediary banks while the direct message is executed in good faith by the receiver. The action of an agent in the cover chain does not absolve the instructing agent of the direct payment of its obligation of settlement. The agent bank receiving the direct message has to be aware that the expected cover payment could be subject to delay, seizure or blocking by the intermediary banks before making a decision to credit the next agent or the beneficiary's account. A risk-based decision has to be made to credit the next agent or the beneficiary's account with good funds or advise the account owner that the funds are not final. 13. Some banks might send a MT292 via the cover chain but this not required PMPG. Cover payments, market practice guideline, February 2024 14. MPG FICT COV number 15. Timeout of advice payment proposed new Practice. A direct message with the service level code element, such as WFSM, should be deemed null and void if the settlement of the cover does not take place within 3 business days. MPG FICT COV number 16. Use of the wait for settlement service level code. The wait for settlement service level code WFSM should be placed on the following element and is available for the PAX.008 and the PAX.009. Path. FITO-FICSTMR-CDTTRF CDTTRF TXINF PMTTPINF SVCLVL CD path. FICDTTRF CDTTRF TXINF PMTTPINF SVCLVL CD. As per the CBPR Plus User Handbook, the use of the WFSM service code should be bilaterally agreed before being used in the PAX.008 or PAX.009 message. Please note that bilateral agreement may also fall under applicable implied contract law. If no bilateral agreement is in place, the instructing agent should assume that the instructed agent will ignore the code word and process the payment. 3 frequently asked questions. Q1. Does the usage of the FICT COV create issues by delaying cover payments due to screening, for example missed cutoff time, and result in late payments to beneficiaries? A. The FICT COV cover payment format does include additional data elements within the screening processing itself, and therefore the likelihood increases that an intermediary institution needs to perform additional steps to clear false positives. Missed cutoff times cannot be ruled out completely. Intermediary institutions should follow the best practices outlined in this document and minimize the impact of the regulatory screening process. Ordering institutions should follow best practices in populating ordering and beneficiary customer fields to ensure that intermediary institutions have sufficient details to screen the payments in an expedient fashion. Ref. MPG FICT COV number 6. PMPG. Cover Payments, Market Practice Guideline, February 2024 15. Q2. Does the regulatory screening requirement of the FICT COV create the possibility of a delay in the execution of cover payments, and could any party in the chain benefit from float? A. Like any other payment decision, the debit to the sending bank's Vostro account and the credit to the clearing account should take place on the same value date. The screening process may result in a delay of the execution of the payment, but a delay should not be the result of any deliberate action. No party should be unjustly enriched due to the AML-CFT control process. Q3. Will additional charges be applied to FICT COV, as the information of the MT103 will be mirrored in the message? A. As per MPG Mount 202 COV number 1, the FICT COV is not changing the nature of the MT202 PAX.009. It remains an inter-financial institution transfer. As the FICT COV remains an interfinancial institution transfer, no charges must be deducted from the principal amount. Q4. Is it possible that a remitting bank runs the risk of being caught up in territorial issues, such as boycotts, trade embargoes, watch lists, etc., which would be outside their jurisdiction? A. Banks should be aware that not only the local regulations but all regulations and sanctions relevant to the transaction chain and currency may apply. The risk of a delay or seizure of a cover payment has always existed. The PMPG believes that the FICT COV is not changing the responsibilities banks have in order to be aware and conversant in issues of regulation and legislation impacting their operations and activities. Q5. A difficult situation may occur depending on the location of the sending and the receiving institutions, especially in circumstances where local business days do not align. How can this be addressed? A. Differences in processing days are a fact in cross-border payments. Intermediary institutions can mitigate this risk by prioritizing their processing based on the location of the beneficiary institution and use of the notification guideline outlined above. Institutions should regularly review any special instructions that they might have given to their correspondent banks regarding the processing of MT103 PAX.008, MT202 COV PAX.009 COV and MT202 PAX.009 instructions. Q6. How should the MT196-296 be structured for a non-GPI bank to notify about a delay? A. To allow a certain level of automation of the notification process, a standard keyword should be used to advise a delay of the cover payment. Specific reason should not be given. One option for formatting the MT196-296 MT299 could be PMPG, Cover Payments, Market Practice Guideline, February 2024 16. Q7. Should intermediary institutions stop the processing of an FICT if they suspect that it is a cover payment? A. As MPG FICT COV number 8 states, the ordering institution is accountable for determining the correct message type to be used. However, the intermediary correspondent bank is accountable for the types of transactions it allows to traverse the account they offer as a Nostro service provider. On this basis, as mentioned in MPG FICT COV number 8, the intermediary has the right and in some jurisdictions the obligation to stop the processing and reject the payment in this scenario. Any rejected PAX.009 COV has to be notified to the previous agent via a PAX.002, which in turn may be returned to the agent who executed the FICT COV. Q8. If the beneficiary institution creditor agent has credited the beneficiary's account based on the MT103 PAX.008 and the covering funds are not received for reasons that outside of the control of the instructed agent that received the direct message, what is the recourse of that instructed agent? A. Crediting a beneficiary's account based on the receipt of an MT103 PAX.008 without receipt of the cover payment is a policy decision. Each institution has deployed a process that has been approved by the internal risk committees. Policies should be reviewed on a regular basis as part of the MT202 COV PAX.009 COV handling to ensure a proper reflection in internal financial risk policies. As highlighted in MPG FICT COV number 1, crediting the beneficiary's account in good faith can be seen as an implied contract and obligate the sender of the direct message to settle this obligation. Note: only the entity whose funds are frozen can apply to the appropriate government agency for an unfreezing of funds. Q9. Can non-STP charges be applied to fields in sequence B of the MT202 COV or the underlying customer credit transfer complex element in the PAX.009 COV? A. As highlighted in MPG FICT COV number 1, sequence B or the underlying customer credit transfer complex element exists only to facilitate the regulatory screening process, together with potential FATF 16 checks, but is not relevant for processing the underlying funds transfer. However, as per MPG FICT COV number 6 and number 7, it is recommended to provide structured information to enable easier and faster screening of the information. Q10. Is the MT101 Pain.001 impacted by the use of the MT202 COV PAX.009 COV? A. The MT101 Pain.001 is not used in a direct and cover payment process and is therefore not impacted by the MT202 COV PAX.009 COV. Q11. Can the intermediary institution in case of a multi-correspondent chain forward the screening results to the next bank in the chain to speed up the review process? A. Each institution is responsible for their screening process and therefore the bilateral sharing of information will not expedite the process. Furthermore, no automated processes exist to share screening results that would need to be handled manually. Q12. How to cancel an MT103 for which cover has been provided by a separate MT202 COV. A. The principles on how to cancel an MT103 sent with the cover method are documented in the SWIFT usage guidelines. Alternatively, GSRP GPI stop and recall can be used by participating banks. PMPG, Cover Payments, Market Practice Guideline, February 2024 17. Q13. Although we do not use SWIFT for sending files of individual remittance details to our correspondent, we send cover via MT202 for currency clearing. Should we send an MT202 COV to our currency clearing agent even though the use to cover multiple payments is not recommended by the PMPG? A. The cover payments practice where an MT103 is sent with a separate covering MT202 COV is globally recognized. Treasury payments as described above are bilaterally agreed clearing mechanisms that fall outside the global cover payments practice that has been addressed with the creation of the MT202 COV. It is advised to discuss the clearing of these payments directly with your clearing agent. Q14. Can the content of sequence B underlying customer credit transfer be limited to the mandatory fields as described in the user handbook, or must sequence B reflect the complete content of the underlying MT103 PAX.008? A. The content of the MT103 PAX.008 should be mapped into sequence B underlying customer credit transfer as supported by the field and data elements of these messages. The user handbook mentions for each of the optional fields that in case the field was present in the underlying customer credit transfer message that was sent with the cover method, then the field must be present in sequence B underlying customer credit transfer of the MT202 COV PAX.009 COV. Q15. Is the intermediary institution expected to validate the content of field 50A ordering customer in sequence B debtor in the underlying customer credit transfer elements against FATF 16 requirements, i.e., contact to the sender of the MT202 COV PAX.009 COV in case of incomplete information? A. The intermediary institution's obligation is to pass on the information they receive in the MT202 COV PAX.009 COV and screen the contents against the respective sanction lists. Depending on the transposition of FATF 16 into local regulation, this obligation may be extended to perform a respective completeness check of the originator and beneficiary information in sequence B of the MT202 COV or the debtor and creditor elements in the underlying customer credit transfer of the PAX.009 COV. Q16. The SWIFT user handbook states that the MT202 COV PAX.009 COV must not be forwarded to the beneficiary financial institution creditor agent for reporting purposes. Are there exceptions to this rule where the MT202 COV PAX.009 COV can rightfully be sent to the beneficiary financial institution creditor agent? A. The MT202 COV might indeed be sent to the beneficiary's financial institution creditor agent if it acts as a receiving participant in a central clearing system, for example, through a SWIFT FIN-Y copy-based system. However, in this case, the MT202 COV PAX.009 COV constitutes a settlement message sent directly to the beneficiary financial institution and not a message forwarded for reporting on a transaction, in which case the MT910 CAMP.054 should be used. Note: the use of the MT910 CAMP.054 is an essential part of the cover methods model. This allows the receiver of the direct message to acknowledge that settlement has occurred so that the beneficiary creditor of the direct message can have the funds posted to their account in a timely manner. PMPG, Cover Payments, Market Practice Guideline, February 2024 18. 4 Observations and Recommendations. The PMPG is not a regulatory body and cannot enforce any of the guidelines. It can only point out practices which, when followed properly, are beneficial to the payment community. The PMPG recommends that financial institutions work closely with their regulators to highlight the impact that the financial institution credit transfer (COV) has on the efficiency of the cross-border payment process. Above and beyond the guidelines stated above, the community can use the below checklist to validate the implementation and better deal with the operational impact of the financial institution credit transfer (COV) in those areas where practices are yet to be established. The introduction of the SWIFT Transaction Manager Platform, aka SWIFT TM, is supporting central data dissemination to involved agents in the payment chain. The original use case for the inclusion of the underlying transaction data in cover payments should be re-evaluated as the industry progresses with the migration to the TM and the adoption of APIs. In this case, institutions will have the opportunity to query the TM in real time to obtain underlying transaction details. In fact, the entire direct and cover process should be re-evaluated at some point in time in the near future, as the move to real-time payments and extended clearing system hours might render the direct and cover model not fit for purpose anymore. Given all these ongoing developments of practices, as mentioned as a note in MPG FI-CT COV number 1, in the short term, the PMPG recommends for the communities of users to consider the use of the service level element in the PAX.008 and the PAX.009 ADV to indicate the advice nature of the message. In the long term, a new element in the direct message or a new version of the advice to receive should be considered. PMPG, Cover Payments, Market Practice Guideline, February 2024 19. The PMPG successfully requested the addition of a new code to the External Service Level 1 code under the following definition. Note: the use of the new code word has been incorporated in the CBPR Plus User Handbook. The aforementioned service level code can be applied to the following scenarios: 14. The reference to the BA is SWIFT specific. High-value payment systems might use different versions of the BA or might not be using it at all. PMPG. Cover Payments, Market Practice Guideline, February 2024-20. If an option exists to treat the direct message as an advice, the industry should agree on a practice to facilitate such a process. This should align with the enhancement to the CBPR Plus implementation of ISO 20022, which allows a PAX.009 to be flagged as an advice in the business application header. A similar approach might be needed for the direct PAX.008. The imminent migration from MT to MX will make it difficult to implement such an option for MT messages, and therefore the focus should be on MX messages only. Another view that has been put forward is that management of risk may ultimately need to be a bilaterally agreed decision. Banks who have concerns may need to deal with those directly with the correspondent respondent. Specifically, at the time of exchanging RMA, banks could enter into an agreement that any MT103 PAX.008 MT202 PAX.009 sent to them should be treated as an advice only, and if the creditor agent processes the instruction without receipt of cover funds, then they have done so at their own risk. However, if that decision is not universal across all messages received, then the need to have an element in the payment message to distinguish between the two use cases will remain. As stated above, in the short term, the PMPG recommends the use of the service level element in the PAX.008 and the PAX.009 ADV to indicate the advice nature of the message. In the long term, a new element in the direct message or a new version of the advice to receive should be considered. PMPG, Cover Payments, Market Practice Guideline, February 2024-21. 5. Appendix. The following describes various use case scenarios of direct and cover and identifies the underlying risks. Use case 1A. Beneficiary customer not credited until money received in account with institution. Risk. No risk for beneficiary bank as credit is only applied after cover received. Use case 1B. Beneficiary customer credit upon receipt of MT103. Risk. Beneficiary bank pays before cover is received. Beneficiary bank has recourse on ordering bank. Risk. Beneficiary bank pays before cover is received. Beneficiary bank has recourse on ordering bank. PMPG, Cover Payments, Market Practice Guideline, February 2024-22. Use case 2A. Beneficiary customer not credited until money received in account with institution. Risk. No risk for beneficiary bank as credit is only applied after cover is received. Intermediary bank takes on the role of covering bank. Use case 2B. Beneficiary customer credited upon receipt of MT103. Risk. Beneficiary bank pays before cover is received. Beneficiary bank has recourse on intermediary. PMPG, Cover Payments, Market Practice Guideline, February 2024-23. Use case 3A. Beneficiary customer not credited until money received in account with institution. Use case 3B. Beneficiary customer credited upon receipt of MT103. PMPG, Cover Payments, Market Practice Guideline, February 2024-24. 6. Glossary. AML, CFT, Anti-Money Laundering, AML, and Combating the Financing of Terrorism, CFT. Business Application Header BA. The BA describes in one place key details about the message being sent, such as sender and receiver organization, message type, character set, business service, copy duplicate. The BA enables both application routing rules and logic without having to read the XML business document. False positives. A false positive means that the regulatory screening process claims a positive match against a sanction list, when that is not actually the case. ISO 20022 is an ISO standard for electronic data interchange between financial institutions. It describes a metadata repository containing descriptions of messages and business processes, and a maintenance process for the repository content. Regulatory screening. For the purposes of this document, any activity of a financial institution to scan the parties and the remittance details, as well as the sender to receiver information in a payment transaction, against a set of sanction lists provided by law enforcement and regulatory agencies in relevant jurisdictions, and determine if the requested payment instruction can be executed or not. Transaction Manager Platform (TM) is an infrastructure created and managed by SWIFT. The TM will store a single transaction copy for each UETR and manage and track each change made to a data element by an agent. PMPG. Disclaimer. Whilst the Payments Market Practice Group (PMPG) has used its best endeavors to make sure that all the English information, data, documentation and other material copy and images in this document are accurate and complete, it does not accept liability for any errors or omissions. The PMPG, or any of its members, will not be liable for any claims or losses of any nature arising directly or indirectly from use of the information, data, documentation or other material in this document. Links from this document to other sites are for information only. PMPG accepts no responsibility or liability arising from access to, or for the material on, any site to which it is linked, nor does the presence of links to other sites imply any endorsement by PMPG of these sites or their contents. Reproduction, redistribution and transmission of any information, data or other material contained in this document is permitted, as long as its source is acknowledged. Proceeding to read this document is confirmation that you have understood and accepted these terms. PMPG. Cover payment.